Ladies and gentlemen, good day and welcome to the conference call to discuss Brilloca's acquisition of HSIL's building products manufacturing undertaking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I would now like to hand the conference over to Mr. Gavin Disa from CDR India. Thank you, and over to you, sir.
Thank you, and good day, everyone. We would like to welcome you all on today's call to discuss Brilloca's acquisition of HSIL's building products manufacturing undertaking. We are joined by Mr. Sandeep Sikka, the Group CFO, and Mr. Naveen Malik, the CFO of HSIL. Before we begin, I would like to mention that some statements made in today's discussions may be forward-looking in nature. The actual outcome may vary as they are dependent on several external factors as well. The participants may hence make their own assessments too. We will start the call with opening remarks from the management, following which we will have an interactive Q&A session. I would now request Mr. Naveen Malik to open the call. Over to you, Mr. Malik.
Thank you, Kevin. Good afternoon, everyone. Thank you for joining us on this call today. I hope that you and all your family members are in best of the health. As you are aware, the Board of Directors of Brilloca Limited, a wholly owned subsidiary of the company, has approved the purchase of HSIL Limited building product manufacturing undertaking on a slump sale basis, which constitutes entryway, faucets, and plastic pipes and fittings manufacturing facilities for a cash consideration of rupees 630 crore, subject to closing date adjustments on an arm's length basis. The transaction is subject to necessary shareholders, lenders, and other statutory approvals as required by both HSIL and Brilloca. The building products manufacturing undertaking being bought by Brilloca will include the plant and machinery and other assets related to around 2 million pieces sanitary ware manufacturing plant at Bahadurgarh in Haryana. The plant and machinery and other assets related to current available capacity of 35,000 tons per annum pipes and fittings manufacturing plant at Isnapur in Telangana. This plant is currently under expansion, and post-expansion the capacity would stand at 48,000 tons per annum. 59.5 acres of land along with building and plant and machinery situated thereon for the 2.2 million pieces sanitary ware manufacturing plant at BB Nagar in Telangana, and leasehold land along with the building, plant and machinery situated thereon and other assets related to the 3.7 million pieces faucet manufacturing plant at Tehrani in Rajasthan. All related inventories, other assets, business liabilities, employees, permits also form part of the deal. As part of the deal, Brilloca will be taking the entire land and building at Bahadurgarh and Isnapur pipe plants on around a 10-year long-term lease, which is further extendable. The decision has been taken keeping in perspective the underlying land cost of these two land parcels, optimizing the cost of acquisition and operating dynamics required for the business. The annual rental for these two land and building parcels would be around rupees 16 crore per annum. All these facilities are efficiently managed and have further scope for enhancing efficiencies as we drive future growth. The current capacity utilization at two sanitary ware plants is around 90%, whereas faucet plant in Tehrani is operating at 65 to 67% capacity utilization. For plastic pipes and fittings, Isnapur plant has a current capacity utilization of over 85%. Brilloca, over the next few years, will evaluate whether further plans to upgrade and enhance capacities that are aligned to meet the increasing demand for our products in the market. We are pleased to share that Brilloca is the fastest growing building product company in its operating segments. This transaction will have several benefits, including Brilloca today is entirely dependent on third-party vendors, and the acquisition will reduce this dependence. Since Brilloca has aggressive growth plans, it is not prudent to outsource the entire manufacturing. The changes in the macro environment over the last 2 years have made it imperative for the company to have control over the entire value chain, including manufacturing, supply chain, etc., so as to sustain this sector outperformance. The deal helps create a simpler structure by integrating the entire value chain in a single entity. Market analysts and key investors have, during the course of our discussions over a period of time, inquired about the manufacturing and sales and distribution of the building product business being split in two companies within the same group, further resulting in additional related party transactions. The proposed acquisition can be considered as a step forward towards realigning the business to enable a simpler operating structure that resonates better with our stakeholders. Given the financial strength of Brilloca, the manufacturing processes and technologies can be upgraded and expanded to enable accelerated rollout of new products in the marketplace. The current acquisition provides a platform which we will further leverage for growth. This operating integration will also provide manufacturing to market synergies in the operations, resulting in better efficiencies being delivered over a period of time. Additionally, this will significantly reduce the compliance and administrative burden for management of both companies with respect to the related party transactions under Indian regulatory framework. In terms of financial metrics, the transaction will add manufacturing margin to the company EBITDA. Based on current market condition, we expect this will initially result in incremental EBITDA margin in Brilloca of around 3%, with further enhancement to around to 5% over next few years. We plan to finance the transaction by a debt of around rupees 550 to 560 crores in Brilloca and balance using cash reserves and accruals. As you may be aware that Brilloca reports healthy cash flows, and we believe that in the current business scenario, a large part of the debt specific to this transaction will be repaid in the next 3-4 years. In the sanitaryware and faucet business, we have performed well in a challenging macro environment. In the pipe business, we are the fastest growing player in the country. The acquisition of the BPD manufacturing undertaking from HSIL will only add to this momentum and enable us to deliver faster and sustained growth. Even post this transaction, our ROCE, the return on capital employed for the Brilloca, will be in excess of 25%. In conclusion, I would like to reiterate that the proposed purchase of the building product division's manufacturing undertaking of HSIL is a compelling step towards growth, and we believe it will provide both immediate as well as long-term benefits, enabling HSIL to create incremental and sustained value. Now, given we are open for questions, we are happy to take the questions.
Sir, can we open the call for a Q&A session now?
Yeah, please.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may please press star then 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Porinju from Equity Intelligence. Please go ahead.
Good evening, friends. I'm Porinju from Equity Intelligence. Am I audible?
Yeah, you are audible, Mr. Porinju.
Thank you, sir. Sandeep. Okay, I really appreciate the action now, by the management of acquiring this BPD manufacturing, which was very important. And I used to wonder why the manufacturing of BPD was transferred during the demerger. I have been holding the stock, in the portfolio management since last 7-8 years. And, I had an impression that our glass division will be demerged for various reasons, and it was looking very logical. Anyway, better late than never. We have, I think for me, it is looking like correcting a small mistake we did in the past by demerging the BPD manufacturing also along with the glass division. Anyway, well and good, and the transaction seems to be very professionally and very simply done. 600 crores of revenue is transferred at 630 crores the company has acquired. I understand, as Naveen was explaining, there is no more related party issues, and it's something like a full integration with better margin, and we can focus better going forward. That's what I strongly believe. So I hope the management will continue to keep things simple. That is something I think the investing community had, or analyst community had some kind of apprehension about our company. So let this be one step forward towards that, keeping things simple and striving to make much better operating margins. I used to always be wondering, now we have got our similarly strong brand companies in India in the similar business like Astral, Havells, and Cera. I would say the three companies. In fact, all these three companies are there as part of, their same businesses are done in Somany, in the HSIL. So now Astral is quoting at 12.5 times sales. Havells is quoting at 6.6 times sales. And Cera is at something like 4.5 times the revenue. Whereas HSIL is quoting at around 1.3 times sales. I hope this transaction will definitely, contribute to the reducing the gap between these other competitor companies and Somany Home Innovation. But I still believe, why there is such a big gap. So I just would like to listen to Sandeep Sikka going forward. How do you feel? Why this kind of a gap is still there in the valuations? It's very important, it's a matter of concern, and I think the perception about the company also is not very good among the investing community. Most of which I believe it's a misunderstanding or lack of clarity and little bit of gray areas and a little bit of complexity in holding the businesses. And such a valuable, wonderful brand, Hinduware, is not there in the name of the company. That's one important thing we have missed out. And so that itself creates confusion among the investing community that whether this is the real Hinduware company. So I would like to know from the management, what are the plans to clarify these things to the investing community and the analyst community so that we get a reasonable kind of valuation going forward. That's all from my side, and congratulations for the deal, Sandeep and Naveen. Thank you very much.
Thanks, Mr. Karanju. Thanks for the nice words. And thanks for all the support which we got from you, since you have been invested into our company for a pretty long time. And you have always been supportive and at the same time very critical, like you are today. So I'll answer your question one by one. I will say, this I've been saying, that this transaction market should consider it as a step forward. What we did as a demerger a few years back was very correct from that particular perspective. Based on post-demerger, based on the feedback which we got from most of you who have been attending these calls, giving us feedbacks, internally we deliberated on it. And there would be some series of steps which we are going to take on this. This is the first step, towards, acquiring this manufacturing entity. The benefits of this are, multifold. As Naveen has already spoken, our reliance on the third parties, elimination of related party transactions, the financial strength of Brilloca will, help this in a much faster decision making, and significant reduction in administrative and, other burdens. Even from the analyst community side, while analyzing Brilloca or HSIL, they had to simultaneously analyze HSIL, which also had a BPD division, because the whole fluctuation in the incoming raw material and other things would happen at that particular thing. So internally, we strongly feel that this will add substantial value to the bottom line of the company, and will also help over a period of time accelerate the growth on the top line as such. Now, answering your question, in terms of the understanding of the market, our strategy, which is the Brilloca strategy or HSIL strategy, over the last 3-4 years has been differentiated from the strategy of the other players in the market. Our strategy has been more focused on, further enriching the Hindware brand in the minds of the people, taking benefit of higher brand recall of Hindware in the mind of our consumers, launch more products into more categories which are profitable, and create long-term sustained value. Today, if you see, it's not something which is something new we are saying. We spoke about the same things around 4-5 years back, and they're all part of our transcripts, and you can check the erstwhile HSIL transcripts which are there. Like 4-5 years back, we took a call in 2 key segments of growth. One was our consumer product, and other was the building products, in which we went behind the wall and started selling pipes. I hope you will all appreciate that, given the fact that pipe we are doing quarterly now 160 crores, and consumer product also has grown and is profitable, and both this business are profitable. They are now the new pillars of our growth going forward, other than sanitary and faucets, wherein over the last 4 to 6 quarters, if you try to map us, we have outperformed the market. And we spoke about it, that we will be growing more than the markets. Definitely some questions are always there in the mind of the analyst community, that this HSIL is now a fairly diversified business, constituting of consumer appliances like kitchen chimneys, air coolers, we had water heaters, we had sanitary faucets in Brilloca, and CPVC and UPVC pipes and fittings. But it's very important for all the analyst community to understand one point. We have been fairly successful in terms of each of the elements which we hopped on, we invested on in last 3-4 years. Let it be consumers. We are today the number 2 player on kitchen chimneys and hoods and hobs, and we may be touching a good level of turnover there, which symbolizes that our success into the minds of the consumer. We are pretty strong there on the pipes and fittings. We are pretty strong on the sanitary ware. We are pretty strong on the faucets. And in all the markets which I'm talking, we are in a leadership position. Amongst the top 3 leaders, in the market, you can recognize us. Pipes, the base is right now small, but the leadership is in the growth which we are doing, our growth versus the growth of the rest of the industry. So we do make a significant impact in the mind of the consumers. One clear example of this is that we used to be a pure bathroom brand, when people will use in the commodes or the wash basins. And people are very happy to cook, food on the Hindware hoods and hobs, use chimneys, even take, dispense water from Hindware brand, even, have an air cooler of a Hindware. So which shows how versatile the Hindware brand is. And we are harping on it. We are hell-bent on, achieving the highest growth which can be possible into these markets. We are pretty aggressive internally. We have verticalized this whole businesses into the separate CEOs, and most of our CEOs come and interact with the analyst, every quarter on the results. So there are significant initiatives which we have done as such. Definitely one point, Mr. Paranju, as regard, the names, the rationality of the names, we are internally working, and once it is approved by the board, we'll definitely come back to you. So what I can tell here is that this is a wonderful story as such. We are now, very unique company, having 3 distinct go-to-market channels. Not many people have. And I'm not saying that these 3 distinct market channels are very small channels. In each, we do almost 10,000 plus retail touchpoints, with each channel contributing more than, annual sale of 400 crores. Plus, let it be pipes, consumers, or, sanitary faucets is already higher. So, which is now significant. Now we have a base on which you can grow, build the businesses, build sales, build EBITDA, and also the bottom line. So thank you for all the support, Mr. Paranju. I hope I would have been able to answer your question.
Thank you.
Thank you. The next question is from the line of Sunny Gosar from MK Ventures. Please go ahead.
Yeah, thanks for taking my question. I have a couple of questions. The first one being, basically, if you look at HSIL's building products division performance in Q2 FY22, we had a revenue of about 230 to 40 crores and an EBIT of 9 crores, which I understand would broadly translate into EBITDA of about 15 to 17 odd crores.
Yes.
So the question I had is, what is the scope for revenue increase on the current plant that we have acquired? And basically, incrementally, what's the kind of peak EBITDA that can be done on a quarterly or an annual basis from the current set of facilities that we have acquired?
Thanks, Sunny. So I think if you just simply multiply, we had in quarter 2 a sale of around 234 crore, 235 crores. We feel that based on the current capacities which we have, we can simply do 1100 crores to 1200 crores of sales based on the current market conditions, based on the current pricing of input materials. As Naveen also spoke in the initial remark, that the pipe plant, which right now has a capacity of 35,000 tons per annum, is right now under expansion. And as we acquire these facilities, we feel that by 31st March 2022, a major part of this expansion would be completed, and then we will have an incremental capacity. Any incremental cost after 30th of September 2021, let us say around 50 crores, we may have to pay more because our valuations were primarily based on, the capital work in progress status as on 30th September 2021. We feel that it can incrementally go from here to easily to a level of 1400 to 1450 with the incremental pipe capacity coming into the play.
Right. And that would translate into about 7-8% EBITDA margin at that level of revenue?
Yes, a slight improvement in EBITDA margins will happen because some of the factory costs, which are fixed cost, get apportioned onto the higher. So we feel that as the capacity utilization increases, around, we can have 7 to 8%, margins on this.
Got it. And the second part of my question is, basically, out of this 630 crores or whatever 680 crores that you may end up paying by March 22, what would be the portion of assets acquired and what would be the portion of working capital acquired? Because I want to understand what's the depreciation impact going forward. And basically, what would be also the borrowing cost on the debt that we will end up taking up? So will this be like EPS accretive immediately, or will this basically get EPS accretive by FY24?
So I'll answer 2 questions. So as a part of the whole deal, as Naveen also said, that we are buying certain parcels of land. And these parcels of land in the books of HSIL were at an old rate, but we had to now pay, the current market prices for this. The value of these lands, land parcels which we have acquired, that range in a level of around 70-80 crores. Balance will be there, which in the books of HSIL was at around, let's say, 15 crores. So incrementally, there has been a value addition on terms of on the valuation of the land. Overall depreciation, broadly will remain as in line with HSIL, other than the buildings which we are acquiring. And we feel that maybe there will be one year of pressure on the bottom line, but immediately after that, with all the profits which we'll earn, as we said, most of this will get deleveraged over next 3-4 years. It will be value creative at the bottom line also.
Right. And basically, what would be the borrowing cost that we are looking at?
Right now in HSIL, most of our long-term loans, are in a range of around 6.5%. Working capital in a range of 5 to 5.5%. And similar level of interest rates, we feel that Brilloca will also fund long-term loans at around 6.5% and working capital cheaper. So one more question, in the 630 crores, there is a net working capital of odd 180 crores, which is coming along as such. And over a period of time, we'll optimize this working capital also, because right now we have two different organizations maintaining two different working capitals. So, we'll optimize that also, and that will also bring efficiency over a period of time.
Right. Got it. Thanks for the detailed answers, and good luck for the future. Thanks.
Thank you. The next question is from the line of Vineet Gala from Monarch Network. Please go ahead.
So at the outset, congratulations on a good transaction. So post-transaction, as we have articulated, the margins in the building product should directionally go up, right?
Yes.
On this, how do you see our long-term guidance, that is on FY25 numbers, on the margin front, which was previously at 14 to 16%? So how do you, go about that particular guidance?
So with this acquisition, the incremental sales, will not be much, although with some efficiencies, faster turnaround, some growth impact will be there. But if you just for the time being ignore the growth impact out of this, we feel that immediate impact in the coming quarters post-acquisition, incrementally 2.5-3% increase in the EBITDA margins, which should further grow higher to a level of around, 4.5 to 5% with all the production efficiencies which start coming in, faster utilization of, the resources of the factories. So we feel that unlocking of the EBITDA value in next 4-5 years fully should be in a range of, 4.5-5% around.
So that would be over and above our previous guidance of 14 to 16 odd percent?
In the previous guidance, we had given that overall incremental margins. Those margins were more towards efficiency. Those margins were more towards, better utilization of operating leverage. So we had given guidance that we should be able to incrementally earn 3 to 4% over next 3-4 years. So that will be over and above that. That guidance continues as such. What I'm talking here is more specific to the acquisition we have made here.
Got it. So, and also if you can articulate the capex needs for HSIL over next 3 years, given that the capacities that we have acquired, especially for the faucets and pipe division, they're already at a higher utilization. So can you quantify the capex amount that we are expected to do over next 2 to 3 years?
So if you see a normal maintenance capex of such a level of plant, should be in range of around 25 to 35 crores, wherein, we keep debottlenecking, adding new machineries. But we feel that in next 12 to 18 months, as the growth in the pipe is substantial and we are the fastest growing in the pipe today in India, we may have to put some, small pipe plants across the country. Today, we are more focused in the state of Telangana. We do almost 1100 plus SKUs, which is very, very high in the market, and that's one of the reasons we have been very successful. But pipes, being a volumetric business, has a limitation of travel. So we may consider over a period of time, putting up regional solo pipe plants, so which can, add value to the our penetration into the local markets by selling higher pipes along with the fittings. So that's one thought. So we feel that once this whole plan comes, our average capex, with the incremental capacity, debottlenecking and everything, should be in range of around 70 to 90 crores per annum. as such.
So 70 to 90 crores is X the maintenance capex of 25 crores. So
If you only consider maintenance, it should be 25 to 35 crores. But if you have to do an incremental capacity, whenever we do, we feel that it should be in a range of 70 to 90 crores.
okay, sir, and also this includes the water heater. Any investment in the water heater JV that we are expected to do over next 2 to 3 years?
So water heater is a separate. This call we would like to more focus on the building products, to be very frank. We can take your question in the post results. As regards the water heaters, the investments in that water heater factory is already disclosed in the last call. I would request if you can refer to those transcripts. You will have all your answers there, because that's a part of a JV, not a part of Brilloca.
Fair enough. So that's it from my side. Thank you.
Thank you, Mr. Gandhi.
Thank you. The next question is from the line of Brilloca from Aditya Birla Sun Life Insurance. Please go ahead.
Yeah, hi. Good evening. Thanks for the opportunity. I'm not sure whether you guys mention about what kind of funding you guys will do with both an equity and debt, and what's the repayment plans that you guys intend to do for.
So I think we spoke in the beginning. I don't know. So we have today cash reserve of Brilloca today is debt free. So we are not using any debt, and in fact we have a surplus cash which is odd 60 crores today. Mm-hmm. And we feel that this transaction will complete by around March 2022. We'll have incrementally 40-50 crores surplus cash also earned with the incremental margins which we do. These are rough figures, huh? But we feel that we'll have to contract a debt, incremental debt of around 550 to 560 crores. And we also feel that major part of this debt, maybe 3/4 of this debt, would get paid off in next 3 to 4 years itself. Which the debt we contract for this acquisition with the profits which we earn. And so at that particular time, all these benefits and other things will be highly value accretive even on the bottom line.
Okay, and just 3 to 4 years. So I think in one of the response you also mentioned there's some 180 crores of working capital, and so is that like mainly is there an inventory layer mainly, because I believe you guys are sourcing completely from them?
I just forgot to mention here. So when I say we are debt free, it means that we are not using even long-term loan and not even working capital loan. But based on the inventories today, we can borrow from with all the profits which we earned in last 1.5 years or 2 years. We have parked the entire internal accruals earned in the borrowing by way of paying off the short-term debt and the long-term debt. But we can definitely use this. So actual long-term loans would be ranging between 350 to 375 crores. Balance, as I told you, we are getting around 180 crores of working capital also as a part of the deal. So there will be an incremental borrowing based on that, and then balance, if any shortfall is there, we have a surplus working capital limits which we can utilize to pay off the entire transaction.
And what's the inventory that the acquired entity has as it speaks today?
So the total inventory value as on 30th September is odd 260 crores, which includes inventories relating to the CPVC which we import into HSIL, the plastics in there, and then inventories of brass, inventories of other elements which are there.
Okay, and so is it like fair to understand or assess that by let's say in 3 years out, FY 23, 24, 25, you will probably repay 100 crore each the debt that will raise because of this acquisition? That's first point. And second is what kind of capacities or space that we have in the acquired plants in case you want to expand further, by a minimum brownfield or maybe incrementally capacity lower.
So I'll go line by line. Faucets, very recently HSIL did a capacity expansion around a 1.5 years back, when they increased their 2.5 million pieces capacity to 3.7 million pieces. So that capacity right now we are using at around 65% around. On pipes, we are capacity 35,000 tons. but we are at almost 85% capacity utilization. So there is a margin, but we are doing incremental capacity also. Faucets, we are touching almost 85% capacity, 85 to 87% capacity utilization on the sanitary ware, sorry, not on the faucets. There where we have to see, we have to make additional investment within the factories, or we may look out, maybe 2 years, 1 year down the line that we put up a plant in a very different, distinct location, so that we start capturing that local market also for that particular factory.
Sure. So, okay. So, and incrementally, would you like to, kind of, like you mentioned, one of the responses, 70 to 90 crore would be, of capex for debottlenecking. What is the kind of, revenue generation that, that incremental debottlenecking can generate for you guys?
So most of these capexes, if you see, they can yield a much higher turnover, especially on the pipes. If you see, the turnover can be much higher because the switch on this is much higher. So incrementally, you can easily assume we can do 1.5 to 2 times the value of the investment we do in terms of the sales.
Okay. And lastly, if I may, is it like fair to conclude that incrementally now, in order to grow, we will probably need to, invest to set up either manufacturing or, I mean, the whole, from outsourcing versus manufacturing, what kind of mix, do we expect in the next 2 years time?
So if you see, we were doing, this outsourcing mix of 70-30 on sanitary for a pretty long time.
Mm-hmm.
And we would like to continue. Only thing is that over a period of time, we would like to reduce our reliance on Chinese market for import, if any, we were doing, and try to do this internally. And internally means within India. So we may, go for local development of vendors over a period of time, but outsourcing for sanitary ware faucets will continue. Pipe will be more or less 100%, 98, 99% in-house, because most of the molds which are there are in-house for fittings, and nobody else has those molds. And pipes also would like to do of our own. So I think outsource more focused on sanitary ware faucets, ranging between 30 to 40%.
Okay. Thank you. I'll come back. Thank you very much.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, for the opportunity. So most of my queries have been answered. Now, just couple of things I wanted to. Is there any kind of goodwill that will come on the balance sheet because of this acquisition? And if that's so, how much would that be?
So Hindware brand, if you see, is already part of Brilloca. So what we have acquired as such is a slump sale of land and buildings and plant and machinery. There can be a very minimal amount, because as per the accounting standard, since it is a slump sale, we will have to account for each plant and machinery based on the fair valuation of each plant and machinery as on date.
Uh-huh.
So there may be a very minimal, we have not bought any goodwill as such. All the track record of the manufacturing is already coming along with the deal. But we may record, maybe 1 to 5 crores of goodwill based on the, final asset by line valuation once we do this as on the closing date.
Okay, so that's very minimal. And what's the absolute level of depreciation? You did mention that it would be similar to in line with what it's being seen in HSIL. So what will be the depreciation in our books for this acquisition?
So if you see, what the level of depreciation which was there in HSIL manufacturing was about 24 crores per annum. Since we are not taking some buildings along with it, so we feel about 16-17 crores of depreciation would flow in here as such.
16 to 17 crores of depreciation. Okay, yeah, that's about it. Thank you very much, and all the way.
These are approximate numbers, but it will finally be dependent on the final valuations which we do on the allocation of the slump sale value.
Fair enough. Thank you.
Thank you. The next question is from the line of Varun Dadani from Quant Mutual Fund. Please go ahead.
Yeah, hi. Thanks for taking the question. Actually, missed the starting part of the conversation because of closing market hours. So I don't know if my question has been already answered, but I'll just ask. So Can you tell me how much was the debt of the BPL within HSIL?
So actually the allocation of debt internally we do on an HO basis in HSIL as such. So the money which we pay from here, will be utilized by them to pay off their existing term loans as such, because there we have a concept of HO allocation of debt as such.
Okay, understood. So entire 1,200 crores pertains to HSIL, and out of this amount, a part of it would be repaid.
Yes, they have a total total debt, including short-term, long-term, 1,100. So 630 crores will be taken off once they were completed.
Okay, sure. Okay. And so what was the basis of the valuation? Basically, I understand that it was a slump sale, but then there would be some basis. So some color on that. How was the valuation done?
So Brilloca hired Ernst & Young to do the valuation. And we had two valuers, and HSIL had appointed Deloitte. So both had Big Four on the either side. And both of the organizations, they have focused on valuations linked to the DCF more. In fact, the weightage is on the DCF rather than the asset valuation. And valuations are not far off, and the value of 630 crores is within the range of both the valuations which has been done. This is based on the negotiation between the two organizations.
Okay. Thank you. That's it for me.
Thanks.
Thank you. The next question is from the line of Abhishek Vora from Ambit Asset Management. Please go ahead.
Hi, thanks for the opportunity. My first question is on...
Excuse me, sir. I'm so sorry to interrupt, but your audio is not clearly audible, sir.
Your voice is not clear, please.
Yeah, am I audible now?
Yeah.
Yes.
Yeah, thanks. Thanks for the opportunity. My first question would be on the sanitary ware business. What percentage of our raw materials are we dependent on import?
So if you see the overall manufacturing, what we are sourcing in Brilloca till now, 70% was sourced from HSIL. Another 15 to 20% we were importing. Another 10% was contingent on the other vendors in the market today. So, but as I told, we may reduce this by another 5 to 10% over next 2 years. Our dependence on China and shifting it to India.
Right. So dependence in China would be what, 15-20%, and which you will reduce it to 10-15%, right?
Yeah.
Right. Okay, thanks. And on the geography mix, where are we more, dominant leaders? Would it be the west, north? If you can throw some color there.
We are strongest in south, followed by north, east, and then west.
Sure. And what would be our target market, tier 2, 3 cities, if you can give some breakup there also?
So if you see the top 7, 8 cities in India, so almost 25% of our sales goes to this top 7, 8 cities, and balance goes to rest of the cities. So we monitor it on this top cities, and then the classification of tier 2, tier 3 is very different internally. So, but then ultimately, material gets sold through a sub-dealer mechanism into the greater interiors of India.
Sure. But 75% goes to top 10 cities, right?
No, only 25% goes to top.
25% goes to top 10 cities.
Yeah.
Sure. And where are we more focused? Whether are we more on mass, premium, even that breakup, if you could give?
So we have a mix. We start our premium called Italian, Hinware Italian. So our mix on the premium and the mass to premium is almost 50-50 now.
Sure. Okay, that's it. And on competition, if anything you can mention, I think one of the vice player has also entered. Then we have already leaders in the market. How do you see the competition going? Because I believe other players have lesser dependence on import, and one of the players was kind of going out of stock. So there was some dry space. But what is your sense on overall competition?
So internally, we believe that markets remain competitive. and people are seeing each opportunity today. So it's not that we are trying to, enter. Everybody today is trying to, fully leverage the brand strength and the markets which they can tap on. We have internal competences, we have internal strength, which are our brands, our quality standards, and very strong after-sales service, and not to talk of very high recall in the minds of the. So we do make investments linked to these, and our investments in terms of nurturing these teams, nurturing these competences will continue going forward, and that we feel that will further lead to the growth in times to come.
Sure. Any growth targets that the team would have in their minds with regards to next 3-4 years as far as sanitary ware, faucetware is concerned?
Sorry, I missed your question actually. Voice actually.
Any revenue targets on this particular segment of sanitary ware, faucetware?
We have given guidance in this many times. You can refer to our transcripts, wherein we have said that we should be able to outbeat the market by 1.25 times to 1.5 times. So whatever the market growth comes through, so we should be able to outperform the market in the segment on sanitary ware and faucets.
Sure. Thanks a lot. That's it from my side.
Thank you.
Thank you. The next question is from the line of Mayur Gathani from OHM Group. Please go ahead.
Hi, thank you for the opportunity. So just want to reiterate the 630 crore that we are paying for this. The breakup is going to be long-term 400 crore that we're going to borrow. 180 crore is the working capital that we acquire from HSIL, and 50 crore is the internal accruals that we pay. Is that a fair understanding?
Yes.
Okay. And sir, you guided, if you look at the quarters before, you have guided for a 14 to 16% EBITDA margins overall for the company. Is that correct?
Yes.
Over the next 3 years' time or 3 to 4 years' time. So, of course, with that the integration wasn't the part of the discussion at that point of time. So, replying to a previous question, you did not say that, the margins will further incrementally increase because of this integration. You are saying 3% increment that you can take today, but overall guidance should also be 3 or 4% higher probably over the next few years' time.
This is exactly when I spoke. I think a similar question came earlier. So
right,
I said that the incremental 2.5-3% margin is only on account of acquisition. Our previous guidance to further enhance efficiencies, use operating leverage will lead to another 3 to 4% incremental margins over the next 3-4 years. That is over and above this.
Sorry, so that 14% margin that you guided previously, should we take it as a 16-17% in the next 3-4 years' time?
So no, it is not this. So if you see our operating EBITDA margins were in a range of around 11%, which we gave a guidance that 10 to 11%, that this should be in range of 14 to 15%, without the acquisition. And with the acquisition now, it will be ranging additional 2.5-3% over and on the top of it. This is on a consolidated shell basis.
Okay. Fair, sir. Thank you and all the best. I have just one reason. Previously that this transaction did not happen in the past during the demerger because of stamp duty that you wanted to avoid and not unnecessarily pay. So it's just because now you're giving the land on lease and paying 16 crores. Is that kind of taken care of?
So it's not only, when any sort of a decision making is taken, stamp duty is one part of it, which is an outcome. But there are other rationalities, which are there. So when we did a last demerger, that was based on the market conditions prevailing at that particular time. Our operating overall holding structure, our enablements to do that demerger at that particular time. Overall economic scenario, the business scenario keeps evolving. And that's why we are saying that you can always consider this as a step forward towards, of what we did 4 years back.
So, it's just that you are now more, I shouldn't say this, but just that you're much more confident on the business strategies, and hence the vertical integration is backward integration is a better step right now.
Confident even at that particular time. So it's basically that how fast and how agile you are in terms of decision making. So it's not that, if you see most of our transcripts, we never said that we'll not do any assets. So no company can, 100% run without any plants over a period of time. So you read through the transcript. We said that even for the consumer products, after a particular scale is achieved, it is important to have our plants in-house. And
I completely agree. You said that. I agree. But I was not very sure of why this now and why not then.
For history is history. Let's move forward now.
Fair enough, sir. All the very best.
Thank you.
Thank you. The next question is from the line of Aditi Kasbekar from Kitara Capital. Please go ahead.
Hello.
Hello.
You can hear me?
Yeah, I can hear you well.
Yes. So, sir, thank you for the opportunity. The question that I have is, what is the written down value of the assets that you've bought in the books of HSIL? Because I think the depreciation out there is somewhere around 26-27 crores. So just trying to sort of reconcile, how that works. That's part one of the question. And the second one is, what is the average age of the plant and machinery that you've bought?
So if you see, the overall depreciation in HSIL relating to these assets which we are acquiring should be in range of, I've given this at 24, 25, 26 crores. And since we are keeping some part of buildings there only as a part of the deal, on which we will give the lease rental, so effective depreciation moment will be around 18-19 crores to this side. But this is again subject to allocation of final values because there has been some revaluation in the lands also, because when we have bought the lands, we have bought the lands at current market value. Whereas in the books of HSIL, they were at the book values, and one of that land, BB Nagar, is very old. Answering your second question relating to what is the vintage of the plant, like our faucet plant, we commissioned in 2014, plus we did a capex around a year and a half back. Pipe plant was commissioned in 2018, in undergoing current expansion. Sanitary plants are slightly older plants, and average life, but we keep investing in refurbishing this plant. So I think the average life of the assets in the sanitary plant should be around, 8 to 10 years.
Okay. Understood. Understood. So, sir, then the rent that you're talking about of 16 crore, so the amount that you're saying, so basically there'll be rent of 16-17 crore and then there'll be depreciation of 16-17 crore. Is that what you're suggesting?
The rent would be in range of 15-16 crores, and depreciation which gets charged to Brilloca should be in range of 17-19 crores.
Okay. Understood. So it is 19 plus 16 effectively.
Yeah, that is the rent part. Yeah.
Correct.
And these rentals will get amortized within interest and depreciation as per the accounting standard, not entirely into the depreciation.
Yeah, fair enough. That's Ind AS 116. Understood.
Yeah.
Okay, thank you.
Thanks.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial. Please go ahead.
Yeah, thanks for the opportunity. Most of my questions have been answered. Just one thought, before the demerger, we were thinking that the business of building product was kept in Brilloca, and there might be, in the future, we might look at some partner, strategic partner or investor in the Brilloca. So is this the precursor of this? Because let's say if we are considering something like that, and therefore we are now, acquiring this manufacturing also in that company.
So, the question is good, but the answer is very difficult today. As I told you, Hindware brand is very strong as such, and many international players would like to come to India and participate in such a growth story. But nothing as such today, to be very frank, and I can comment on it only on the things what board has approved as such. So that's a crisp answer I can give on this.
Okay. Okay. Thanks.
Thank you. The next question is from the line of Karan from Asian Market Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, just wanted to check with the growth rates for each individual segments. How do you see the market shaping for next 2-3 years? Any comments on that?
Sorry, you hold your mic a little bit away and your voice is cracking actually. I don't know.
Yeah, am I audible now?
Yeah. Please try to speak slightly slow, please. Thoda volume.
Sure. Sir, just wanted to understand the growth rate for individual segments of sanitary ware, faucets, and plastic piping.
So here we have already given guidance historically, and this guidance is, which were given at that particular market conditions. We feel that still holds good, that in next 3 years, we've given guidance a year back for 4 years. So now a year, almost 9 months have gone past, that we should be going, beyond 1,000 crore for pipes. And we should be able to outperform the market, which we feel sanitary ware and faucet market should ideally grow based on the current market conditions, because the real estate is doing well, ranging between 10 to 12%. We should be able to maintain our growth path between 15 to 18% going forward as such.
Got it. That was helpful. Thanks.
Thank you. The next question is from the line of Puneet Khanna from BOB Investment. Please go ahead.
Yeah, good afternoon, sir. So my first question is that at the time of demerger, the idea was to retain the manufacturing with Hindware and the distribution and sales side with Somany, under the umbrella of Somany. So now, what is the reason for that change to transfer all the manufacturing? And the second question is that what are the market synergies we are expecting from this transition? What is the impact on the market shares?
So I think in the question one, I don't know whether you're fully aware. So it was even Hindware, when we did a last demerger. So Hindware was not part of HSIL. As a part of the demerger, the brand Hindware moved from HSIL to Brilloca. So HSIL Residual was only a pure manufacturing entity as such. And the decisions were taken on that particular time, how the markets were looking and how the markets was responding to the overall requirements of that particular time. But given the current COVID situation, the company felt that it should have a very strong in-house integrated chain, given the fact that there were some turbulences when this COVID started. Everybody in India started having a heat. The supplies were not available from the vendors. So given the fact that these are two separate distinct companies being run by two separate boards, any disruption on the sourcing part can render the growth plans of Brilloca in a different direction. So this whole thought has been evaluated over last few months, based on which the respective boards took a call. And this is more synergetic now with this. Brilloca is a focused building product company, and you don't have more building products within the group as such. And HSIL on the other side, as we understand from them, they will be more focused on the packaging side.
Sorry, sir, one more question. Are we expecting any IPO in Brilloca or any foreign investor to take the share of Brilloca?
I've already answered this question a few minutes back, taking the last question. You may refer to the transcript here, please.
Okay, thank you.
Thank you.
Thank you very much. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments.
I thank you, everybody. I think all the questions which emerged, I thanks a lot, and they were very interesting. We have an approach to market, wherein we are always very happy to answer the questions. And I think each one of you attending the call will be appreciative of the fact that what we have spoken 3-4 years back in terms of development of new businesses, realigning the businesses, we are on a path to do that. And you will see the success of our organization going forward as such, based on the key leverages which we have generated internally. as such. I'll just thank you, each one of you, who have participated in our growth. You have invested along with us. Thanks for all these things. Thank you.
Thank you very much. Ladies and gentlemen, with that we conclude today's conference. Thank you all for joining us. You may please disconnect your lines now. Thank you.